application in finance, and what we technically call as FinTech in short, and in full you can say that financial technology. Okay. So actually, I have a couple of related papers, research papers. Initially, I thought of discussing that papers, but I am not sure actually whether it is going on in a research-oriented structure or is it through applications or concepts. I am not exactly sure, but I'll give you a snapshot that this is one recent papers, my paper. This is related to sustainable economic development, and that too in comparison with the financial inclusions. Then you can say this financial technology that is partly related to ICT development, because it's a kind of digital infrastructure. And that digital infrastructure is directly and indirectly linked with the financial technology. For example, it's like mobile phone, mobile telephony, and then again internet banking, something like that. And then the impact is through growth. So I have 2-3 papers in this context, but this is too technical, and there are lots of statistic used in this particular process. If you can download, then you can get to know. So there are lots of insights in this particular paper. So let me slightly talk about the details about the particular concept, and then I'll come back to if time permits, I'll come back to this particular paper, research papers. So I have 2 PPT. One PPT is related to the basics, the kind of understanding, and there is again a second PPT which talk about the little bit background and history about FinTech, right? So which I'll discuss after this, and then we will go over this particular. If time permits, I will go to that particular paper, or else I'll stop, and then we'll have some kind of discussions. Okay, so let me start with this particular concept. So why this FinTech is actually so popular, and what you can say financial technology is so popular. It's not a question of financial technology. Technology is all-time favorite component. Without technology, nothing can happen in the economy. It's part of these innovations, and in fact, I have a couple of papers related to innovation. So something bringing innovation into the financial market is some otherwise also called as financial technology. So that means you need to bring something new to the system. Technology means something new to these systems. It may be in the form of product, it may be in the form of service, it may be in the form of delivery, it may be in the form of some kind of infrastructure, something like that. So anything. For example, mobile phone, right? Or you can say internet banking, right? Or you can say that payments, right? Paytm or Google Pay, something like that. So these are all actually basically called as financial service, and that too we are doing through technology. So that's why these are all sometimes called as or you can say classic example of financial technology. So we are bringing technology to the financial systems. So maybe it is in the form of a product or in the form of a service, right? Just like we have a goods and services. So it may be in the form of direct products, that's in terms of goods, and in the form of services, right? So like if you send money from one party to another party, then that is something called as say financial services, and that is done through some kind of technology. Why this financial technology is so popular nowadays? It is because of digital infrastructure, that's otherwise called as ICT infrastructure. That's how the paper is actually. I have lots of work on this ICT infrastructure, because without ICT infrastructure, this financial technology is not so meaningful. So that means actually if you talk me what is exactly financial technology, that means it's a mixture, or it's a kind of product between a financial infrastructure and ICT infrastructure. So without ICT infrastructure, financial service or financial implications, financial applications, financial functions, whatever you talk is totally what you can call problematics, right? So to have a good functions and to have a good structure, so you must have good ICT infrastructure. That's why we can see some place, then you can visualize everything, right? So I am sitting here, but I can see what is going on in a kind of stock market, what is going in a particular financial market, what is going on in the exchange market. So that's why it is beauty of it's a ICT infrastructure through which you can see. So there are many things through which ICT infrastructure brings financial system in a kind of favorable positions or favorable conditions where the utility and the kind of the particular sector, the sector itself is actually improved like anything. So that's why let us start with the concept. We can say why you need actually financial technology, right? So when you say fintech and financial technology, so I don't know, it's yeah, see, it start with the, this. It's visible, right? Hello.
No, sir. As
Not
of
yet,
now,
sir.
not yet.
Okay.
I think it's loading, sir. Actually, your pointer is circulating. Yes.
There's something wrong. Yeah. Is it visible now?
Yes, sir.
Yeah.
Your first slide is only visible, sir. The one which was before.
Yeah. No. We are in the first slide itself. Okay. So now I'm moving into the second slide. Okay. So now the end product of financial technology is something called as financial development, right? So we need actually financial sector development. Without financial sector improvement or without financial sector development, then economic development, economic growth, or any business kind of development not happens, because in a kind of business environment, right? In a particular economy, we have a different markets, right? Product market, factor market, financial market. Again, within financial market, you will find plenty of markets like banking, stock market, bond market, insurance market, commodity market, derivative market. So there are many different markets are there, and my talk is actually related to something financial inclusions, financial integrations, and then fintech. So there is a beautiful combinations. In fact, I don't know who has proposed this topic, but financial integration, financial inclusion, and fintech. So fintech is a kind of product through which we can link financial inclusion and financial integrations. Financial inclusion and financial integrations, sometimes it's more or less same, but there is big difference. Okay, so financial inclusion basically how based or what are the ways you can include people into the systems, right? Particularly in Indian context, with the help of Modi government. So the financial inclusion process is going on very fast and smoothly. So for example, how do you know? So you can see that number of people using banking, okay, number of people using in the stock market, stock market assets, right? Or stock market. So you must have account in the stock market, you must have account in the insurance market, you must have account in the banking, you must have a bank account in the bond market. So then these are all part of financial inclusion. So that means you will be part of the particular systems, either in the form of say, for example, if you say bank, so either you will be part of the systems by making deposits or making loans, right? So you have an account, and then again, so far as the SS is concerned, the use is concerned, so you can do through technology. Earlier days, what we are supposed to do, so you will go to a respective bank and then you within a particular time frame, and then you can do the needfuls, right? But today's contest, it is not required. You can sit in your home, you can open the account also, through online. So you can open the bank account online, and then you will get all details here. So you can do all transaction also through your home. So that's thanks to again FinTech. So that's because of technological improvement in the financial systems. So we are getting this opportunity. So to send money, even you are sitting here, you can send money to Washington, or Melbourne, or kind of New York, something like that. It's very easy to send nowadays, and thanks to again FinTech. Okay, so by the way, what I mentioned that FinTech is nothing but kind of innovations or some kind of inventions through which financial system can be improved, right? And when financial system can improve, then we technically call as it's a kind of financial sector development. Either service is improved or your product is improved, right? And in any context. But the focus is actually on financial service, right? There are lots of financial products are also available. You can purchase all these financial products through again online systems, and that too through the FinTech. But recently I find actually financial services are very emerging and very attractive because of this FinTech. So then all these details, and when you link and when you integrate, that becomes called as financial development. Literally, what is exactly financial development? It means factors, policy, institutions that lead to effective financial intermediations and effective financial market systems. Again, for what? Why you need actually effective financial market or financial systems? So in order to have good financial depth, good financial assets, and good financial efficiency, and then stability. Of course, you can add integrations, right? So sometimes on depth, assets, efficiency, stability means the focus may be with a particular market or with a particular bank or with a particular, you can say, stock market. But when you say integrations, that means you are linking all the markets simultaneously. So when you like to link all the markets simultaneously, that's technically somehow called as financial integrations. So the thing is how to include people into the systems, okay, a financial system, and again how to integrate them. Okay, so it's not for example again. So you may not have a single bank account. You have a different bank account. You may have also investment in bank, investment in stock market, investment in insurance market. Now, what is the beauty? From your bank account, you can connect or you can do all the transactions simultaneously. You can purchase stocks. You can you can purchase insurance again through your bank account. So when you do this kind of processing, that is also part of financial integrations. Okay, but literally financial integration means it is actually a country to country a kind of linkage, or one financial market to another financial market, one stock market to another stock market, something like that. That means Indian stock market with US stock market, something like that. So this is literally called as financial integration. So the end product of FinTech is to bring financial development. That is not the ultimatum, or that is not the ultimate objective. It is one part of one of the important objectives in this particular process, right? Okay, so by the way, why you need actually financial development? Because financial development brings economic growth and brings sustainable development. Economic growth may happen, may not happen, but when you talk about sustainable development, then by default economic growth will be appearing in the system. So that's why to have a sustainable development, a financial market stability, financial market integrations, and financial FinTech, role of FinTech is actually the high requirement. Without FinTech, today's context, without FinTech, without financial market integration, without financial market stability, without financial inclusions, it's very difficult actually, very difficult. So that means to have a sustainable development, so you must have a stable financial market with updated and latest technology. For example, even today you go to a particular bank, that bank may not also well link with your digital kind of process. Okay, so all banks are not you go to rural area particularly, something system is still in the backward side, but nowadays there is lots of improvement. But when you talk about sustainable development, so if you look into this definition, it is connected to something called as present generation to future generation. So that means technically when you say consistency, efficiency, stability in the financial market, by default one part of this objective is just to maintain the kind of status. If you say that let's say well, ATM, let's say, so there are lots of areas you go, ATM facilities are very good actually. So installing ATMs in a particular city is a type of financial infrastructure. Now the question is actually it's not that infrastructure is readily available, but that should function very efficiently, okay, and timely. So if that is not functioning timely, just to make for a showcase, then that itself is a lack of sustainable development. So that means when you install a particular ATM machine, that should operate actually over the time in a very systematic way. Okay, so then that is also a part of the sustainable. So that means if today something is functioning, then tomorrow it should function. Okay, so in fact that will be better, in a better way it should function. So that should be the kind of mindset, and one of the objective of FinTech is actually like that only. So even day after day, so the system should improve like anything. So the literary focus of FinTech is just to improve the financial systems over and over. So once you improve the financial system day by day, then that itself brings lots of financial development, lots of economic growth, lots of sustainable development. So that's why our focus should be actually in the long runs. So this is the 5P approach. Those who are in the marketing domains, their things are different. But here actually FinTech can connect these 5P very effectively. Okay, people, planet, prosperity, partnership, and peace. Okay, so when you say peace, that's something inclusive, say. For example, sometimes you have bank account, you have a linkage with the stock market, you have insurance market, but I don't have. So I may feel something better. So probably you may not have the access, or you may not have a capability, you may not have the literacy, or you may not have a kind of information, or you may not have a kind of infrastructure. But as the duty of the governance is to provide all these facilities so that people should be included into the financial systems. If people, that's why Indian government recently they have done, they are putting very low interest rate in the banking sector, so that people should not put only money in the bank only, so they can go to the other markets like mutual funds, or stock markets, or bond market, insurance market, so that so that is also financially included. So that's also financially included, and that is also part of this financial inclusion. So those who are actually part of this developmental process, so we have World Bank or UNDP kind of concept that's called as 17 goals of our sustainable development goals. So now FinTech, actually today's context, FinTech has a fantastic role to achieve all these objectives, both directly and indirectly, right? So now in the recent episode, so that's a plan of 2030 sustainable development goals. So the idea is the focus is so the digitalization process, through which actually we can link the peoples and we link the all services so effectively, efficiently, and in a kind of sustainable way, so that every people even staying in the far away, they can also well connected into the systems. You may in the rural area, but still you can access all banking services. So it does not matters where are you now. So that's again thanks to FinTech. So So I may be in the urban area, you may be in the rural area, or vice versa. But still, the operational process and the kind of investment process is very much, smooth, actually, stable. That's thanks again to the example of, kind of, fintech. So now with these basic introductions and the kind of importance, the kind of need, the kind of requirement. So now I will give you some hint about, fintech, right? So what is exactly fintech, right? So I have already, briefed that what is that particular concept. So, when you say technology, then by default something new. That's what, we start with the term called as, innovations, right? So it may be in the form of a new product, it may be in the form of, new service, or it may be in the form of a new market, even in the form of a new infrastructure, okay, something like that, For example, earlier days, for any banking, kind of, facility, you have to go to the bank. But today you have actually ATM facility where you can withdraw the money, where you can deposit the money. Again, through mobile phone, you can also, do the transaction of, money. Again, through internet, you can also do the transaction of money. Again, it's not one account to another account. So that means, you can go to other bank accounts also. So like that, it's a very beautiful kind of, structures nowadays. So that's again thanks to fintech. And again, it is the hybrid, actually. It's the kind of hybrid. So the fintech term is not something new. It's very old, actually. I will give you some history about this, fintech. But the beauty of this particular process, because of, I told you, ICT infrastructure. So it's a now hybrid product because of, ICT infrastructure. This financial technology and financial market is improved like anything. Improved like anything. You now go to bank. It's like, there is no congestion at all. There is no congestion at all. So it's a kind of empty field because people are not going there. You know why people are not going there? Because you can access the bank, you can do the transaction from your kitchen, from your office, from the road, from the field, even from the bathroom also you can do the kind of transaction. Does not matter. If you have a mobile phone and if you have a laptops and with internet facility, you can do whatever you like to do. So wherever you may be. So that's the beauty of this, financial technology today's context. It's not in India, across the world. So so again, thanks to ICT infrastructure again, which is actually bringing into the financial system very effectively and very efficiently. So financial technology that create new or improved financial services for both consumers and business. So we just like in the market we find consumers and producers. So here also same things. There are two parties actually. So one side you are a customer, so other side I am the kind of businessman and sellers. So right, so both these sides. So I may be part of both these sides. I may be a banker, but I can do the transactions for myself or I can do the transaction for others. Same things I may also go to the stock market, and my role is also similar, in and out kind of process, right? It includes everything from personal financial management tools to insurance payments and derivatives, okay, asset management, savings, okay, any financial platforms, compliance, blockchain solutions. So many things actually. It is actually the basket is very big now. When you talk about financial technology, because it includes all kinds of improved financial services and improved all kinds of financial products. So that's why this basket is very big now. So that means the coverage of financial technology is very significant nowadays. And today's context, particularly last 2 decades, right, or in the case say past 20 years. The financial sector that has spent the most on technology, and if you don't spend on this, financial service, or if you don't improve, then you may not stick into the market. For example, let's say ATM. If one bank is providing ATM facility, means you are supposed to provide ATM facility, right? Well, for that you actually have to invest, and without investment you cannot have ATMs, right? I was in Gujarat in the year 2005. I was in Vapi. So I could remember that in that city you will find plenty of ATM machines, right? Particularly ICICI Bank, Axis Bank, IndusInd Bank. It's very popular. You go to any corners, you will find there are lots of ATM. So that means the particular financial infrastructure and that to the kind of financial technology improve like anything in that particular domain. So the area like, so of course eastern side, eastern India, that comes very means after a long time it was such kind of facilities, but it was improved like anything in the earlier very early during these areas. Even if you go to the Washingtons and New York, so these services are well developed in a long back again. So that's why my question is how best it is implemented or applied in different situations, different contexts, in different locations. But now like Abdul Kalam's approach, so we should have a balanced kind of approach everywhere. So the idea, that's why I connected with sustainable development. It's not that we have to maintain a particular technology over the long run. So, but you have to bring in a kind of balanced structures. If a particular state is having well balanced financial infrastructure, then why not other other state and why not in other states? So it should be have equally. So for that everybody is actually responsible for that. Okay, so we should have similar kind of service across countries and across the world, so that every people can be benefited equally. So and that itself is a part of financial inclusion. If you don't create infrastructure, then you will not bring financial inclusion. You will not bring actually financial integration. So financial infrastructure plays a fantastic role. Okay, so FinTech, in other words, I can call it financial infrastructure, because any service you are talking, that is a part of financial. For example, ATM is a kind of financial infrastructure. This online banking, it is also kind of financial infrastructure. You can call financial technology, I can call it a kind of financial infrastructure. So now if you don't have a financial infrastructure, then your financial system cannot improve very effectively. If your financial system cannot improve very effectively, then your whole business sector or other sectors cannot improve very effectively, because the key to the system, every system, key to the economic, every economy again, so is the finance. Okay, in the financial market, financial service, financial products. So if these are all not there, then it's very, very difficult to maintain kind of stability or sustainability in the kind of requirement. So when you talk about FinTech and its applications, so I can keep in three things here. So FinTech, RegTech, and TechFin, right? So it's other way, all wine in a new bottle kind of process. So FinTech means the application of technology to financial services, or the use of technology in a kind of financial market, basically. Okay, so how best way you can deliver this service? That means technically that itself is something called as linkage. We are linking bank to people or people to bank, something like that. So that means when your technology is improved and technology is updated, technology is very effective, then the linkage and integration can be also very effective, and by default. So when your technology is there, then that means you can include people into the financial system. It's a supply-driven approach altogether. But if you don't have an infrastructure, then you cannot actually encourage people to come into the systems. But when you have infrastructure, by default, people will be attracted. You need not require to go to the people. People will come to you. So that's the beauty of the financial technology. Okay, so the other is actually the application of technology to regulations. Today's context, when you have an online market and digital market and online service and online transactions in terms of delivery and in terms of payment, something like that, so there may be some kind of disturbances. Okay, so some kind of unethical practice or something like that. So that's why. So the regulation should be very tight. So that's why when you say FinTech, then you should have actually similarly good technology to regulate, but by banks or to read. We have a similar kind of process through infrastructure or through kind of law something that need to be actually, for example, let's say we are doing actually money transaction, or you can go to the, say online banking. Earlier days actually, if you like to transfer money one account to another account, just you log in and go for again passwords, then again transaction password, something like that. So nowadays actually again with improved service, or say because of fintech applications, the system is more effective, more stable, and what you can call it, more secure, you can say. Because when you try to transact do any transaction through online, then obviously once you enter everything, then by default, before you do the last step of financial transactions, so you will receive a SMS with your registered mobile or registered email account. And after that, if you say okay, or if you put OTP, then it will work. Otherwise, it will not work. Again, another way of improve service is that when you do the transactions, but everything okay and you made the transaction, then again you receive the SMS, right? You receive a kind of email, so that this much of transactions it is happened in your account. So that means if you are the party, then obviously you remain happy with that, because you will get some kind of acknowledgement, and that itself is a kind of accountability. But sometimes if it is not by you, then by default with this particular informations you can contact any banking authority or a party, so that you can stop the transactions, or you can see that this is some kind of illegal transaction or something like that. Please take care. So that means it is another way called safe and secure. So then that's again thanks to financial technology, or regulation technology. Okay, so TechFin is something called as the application of financial techniques to data. Okay, financial technique to data. Today's context, we are in a kind of digital economies, and to earlier days information was not so important, and it was not so easy to collect the information. But today's context, information is very important, and it's very easy to collect, gather, right? So that's why today's context we talk about analytics, big data, machine learnings. Okay, so these are all actually because of this, again thanks to ICT infrastructure. Very easily you can capture all this data. When you do all kind of online transactions, then it is all recorded. Actually it is all recorded by default. You can gather all this data very effectively. But if you go kind of like butter systems, then information is not recorded actually. But today's context, because of FinTech and because of digital infrastructure, so all informations are very easily recorded, and that itself transfer into a form of called data, and that too it is in the form of big data. Because when you do transactions, suppose I am just gathering transaction data, right? Financial transaction data. So every second the transaction is going on, and every second it is recorded. So if you just download all this data, so that means you just imagine then how much data you have in your hand. So when you have all these collection in your hand, then that itself is actually strengthen the particular systems, because you can check all the volatility, all the kind of plus minus in your business process or in a financial transaction process, whether it's growing very fast or in a sustainable way, or is there any defects, or is there any kind of ethical practice. Everything can be actually, you can from this data you can observe all details very effectively and very efficiently. That's why FinTech is a very effective tools in this particular process. So now coming to the second term is actually financial inclusion and then financial integrations. Okay, so so the financial inclusion means that the individuals and business have access to useful and affordable financial products and services. So that means technically when you talk about FinTech, then financial inclusion by default will be in the process, because the ultimate objective of financial technology is just to bring financial inclusions. Okay, financial inclusion does not mean that you have to bring only new people into the systems who are not part of the system earlier. Now they are part of the system. Financial inclusion also means that your financial involvement is in a kind of a scaling effect, right? For example, earlier you have one account, now you have a 5 account. you have a one connection with one sector, now you have a connection with different sectors. So earlier you with banking only, now you have in the stock market. Just think about 10 years back how many people they are in the stock market. Now just if you compares now how many people are in the stock market. And stock market is again something big again. But just think about bank, because low class peoples or poor class people, they start with the first banking actually, then they will go to this stock market, insurance market, bond market, derivative market, okay, some market, all these markets, they will go depending upon your income level and literacy levels and kind of business levels, right? So but the idea is scratch level idea is start with banking actually. People very much acquainted with the banking system, and now many peoples, okay, so around 90% of the peoples are included in the financial system, and that is one of the big achievement with the country like India. So people are linking very fast actually, and again with the help of Aadhaar card, okay, so the security and kind of the system is very accurate against, and very easily it can be actually effective for this financial inclusions. So you need not require to have authenticity. For example, now I remember 15 years back and 20 years back, if you like to open a bank account, so you go to the bank and then bank personnel will say that please take undertaking from a party who has a account in the bank. So that means you have to find that a person who has a bank account in their bank, and then again to give, you bring authorization from them. After that, they will allow you to open the bank account. Today's context, it's not required. Just you show your Aadhaar card, that itself enough to open a bank account, right? So that means the system is so accurate and so effective and so efficient nowadays. And again, thanks to financial technology. And because I told you, because of digital infrastructure, so the financial service improvement is very, very, excellent. And that itself is the definition of FinTech. Because you see, Aadhaar is very much linked with digital infrastructure. So that means if you link with Aadhaar, means automatically you can access each and every market. Okay, so even you can do insurance business and derivative business or bond business, everything you can actually do through this particular So once you have an account, so one account you have, then automatically that will link with other accounts very easily. Okay, so the idea is actually whether it's a transactions or payments, savings, credit, insurance, any kind of delivery is actually possible through a responsible way and sustainable way. So that's how the financial inclusion is actually important. And you remember, financial inclusion has been identified as an enabler for 7 of the 17 sustainable development goals, which I have already mentioned. So that's why I first brought that particular concept. So when you include people in the financial system, so that itself actually solve the problem of poverty. At least you will be acquainted and not once you are in the platforms, then you will get some kind of psychological boost. As a result, you try to improve yourself in terms of income, in terms of employment, in terms of service, whatever may be. Classic example is starting with the Bangladesh Economic Grameen Bank. Okay, so just you open an account with with a particular guy, whether they have a kind of deposit or not, that itself actually motivate people to work something differently. Because we have a classic example. So the success of Grameen Bank and the success of microfinance is classic example for that. Classic example for that. The microfinance itself, now because of FinTech, so the effective is very very strong now, very significant now, and that too the coverage is also very significant now. Okay. So when you talk about financial inclusions, it's both formally and informally. So that means technically we can say that these are all actually bookish definitions. Today's context, not it's not that you are 16 years old. Even you are 5 years old, still you can open a bank account. I have a son, even 4 years old, I have open his account. It's possible actually. So you as a father and mothers, you will be guardian, and then you can actually have his or her account. So that means you try your level best, and all young guys, young generations, this should help the economic and help the process very efficiently. But if you are literate, then you can also directly and indirectly contribute into these particular systems, the fintech applications. So fintech applications for financial development and sustainable development is not automatic. Remember, so it is you to or it is that's why 5P concept I have already mentioned. That means we have to really use the involved in a particular process. We motivate people, and we have to use that particular case. So then the coverage will be effective. So if you start creating then automatically it has a defect. So that automatically spread like anything. So that's why your approach is actually how best you can apply into the particular way, so that people will be easily attracted, easily connected in a kind of financial system. So maybe banking sites, maybe stock market side, maybe insurance side. But those who are in the stock market and insurance market, bond market, probably they have a banking. So that means very interesting point you remember. If you have a stock market, if you like to enter to the stock market, you must have a bank account, right? If you go to the insurance market nowadays, you must have a bank account. So that means that itself is some kind of integrations. Okay, some kind of an integration. These are all various kind of so means all people are not now linked into the financial systems, and again all products are also not involved in the financial system. So that needs actually both formally and informally in the banking sector, non-banking sectors. So it's a so our job is to make 100% kind of so that means 100% inclusion. So everybody, that means what you can call as cashless transactions. What we technical today's context, the keyword is cashless transaction. That means once you are financially included, means everything is through the kind of digital process. So that's one of the application, something called as fintech. Because when you doing transactions through online, so that is a part of fintech application, financial inclusion, and that too also financial technology. Okay, so these are all actually different kind of services through which actually fintech can apply, and that to how people are included into the financial systems, right? Still there are lots of overlaps, but okay. So anyway, so the third part is actually something called as financial integrations, which I have already mentioned. Financial integration is just something like financial markets linkage, okay, regionally and globally, right? So for examples, you see today's context, we have if you look into 20 years back and 20 years now. So 20 years back, what is happens? There is a linkage between banking, right? So that too, it's through branch banking. If you do any SBI transaction, then to transfer, any money to another, branch, then it's very easy actually. But if you have a account in SBI and if you like to, transfer into PNB, not so easy. But today's context with fintech and financial infrastructure and improve financial service. So there is no disparity at all. Whether you have account in SBI or whether you have account in PNB, so you go to ATM. So ATM will not ask that what is your which bank account you have. You just insert the card and then you can do the transactions. That itself is actually a very beauty in the process. So the one of the fantastic fintech application is removing the disparity and imbalance in the economy. So ATM will not ask your identity, whether you are PNB customers or you are SBI customers or ICICI Bank customer or something like that. Again, in doing any kind of financial transaction through online, so does not matter whether you are SBI account or PNB, same transaction, same process, same menu, same facilities, same kind of infrastructure. So it's the kind of the beauty in the fintech is that it creates a very balanced kind of development in the financial systems. So that means standardization, you can say. So the one of the fantastic application of fintech is bringing standardizations in the standardization and accountability, transparency in the financial market systems. Okay, linking all banks very effectively, very efficiently. So that means by default, every bank, in the kind of competitive environment, they have a similar kind of facilities. Okay, similar kind of structure, similar kind of flows. So as a result, the process is very effective and very efficient, in a kind of. So now, so when you say financial integration, so that means technically we like to link all the markets simultaneously. Okay, and that itself has lots of advantage. That itself has lots of advantage. So that means what you can call as the kind of lots of stopping of black money. Okay, stopping of white money, something like that, because it is all recorded. It is all recorded, how much you are doing deposit, how much you are doing transactions, and where you are doing, something like that. Today's context, it's not so easy actually. So to do cheating or do kind of black marketing or something like that. It's very of course still people are using cash. Okay, so because of again GST issue, etc., etc. So one of the weakness in this particular system is actually the GST involvement, right? Because of GST, people are not actually, lots of people are not doing or not financially included or not doing financial transactions effectively. So because once you do the financial transaction online, so that means it is recorded actually. So you have to answer where you are getting this money and why you are using this money. You have to give the justifications. But if you go by cash transactions, no, or then it is nobody is asking you and no accountability there. Of course, there are other modes actually through Paytm and through Google Pay, through Amazon. Okay, so you can also now doing the transactions. Of course, lots of people, those who are not recording, means trying to avoid GST, etc. So they are asking that you can go for PhonePe or something like that, Google Pay or something. But actually, it's a very tricky. It's a tricky business now. Government now making that people should be habituated fast in this online transaction process. Once they will be habituated, then obviously government may bring again the kind of accountability in the process, right? So they by default for any transaction if you do PhonePe, then automatically GST may be added or something like that, but nowadays it is not happening. But if you, for example, you go to any bank or you do any transaction in the bank for any other financial service or financial requirement, so then obviously for every transactions sometimes GST is included. This I have also observed that one. For example, now if you pay say your insurance premium or something like that, loan premium or something like that. So then obviously if you pay say 10,000, then obviously 10,000 plus GST by default will be deducted. So that means actually government has also income on this particular process because of standardization, accountability, fintech or financial infrastructure. It is not it helps economic in a much better way and much effective way. As a result, it's not that consumers and all these businessmen, they are beneficiaries. Government is also equally beneficiary, and government also in a position to increase the revenue base also. Because when everything is accountable, no, so the government may not require actually cash, direct cash in a if you have a direct cash in transactions, no, then the black marketing and the corruptions will be in the doorstep. But once you do by default actually many problems can be solved. Okay, many problems can be solved, and and it is a very effective channel through which actually you can bring the kind of sustainable development in the process, right? So there are various forms of the financial integration. So something starts with information sharing among the financial institutions. Okay, so obviously actually now you may go to the go to a particular banking site, then you can get all kinds of financial information, right? So again, so that's because through digital infrastructure or ICT infrastructure, message communicates like anything. Message communicates like anything. For example, if government like to send some message to all financial institutions, only one email that will be enough actually. One email that will enough. So it will spread like anything. So everybody will be by default, within a minute, everybody get to know what is going to change, what is going to implement, or what is going to happens, right? So this is very, very standardizations and very, very informative, you can say, and sharing your best practice among financial institutions. That's why I'm saying, because we are in a competitive environment, and you are supposed to have a best financial infrastructure to make this system stronger and stronger. So if for example, if ICIC ATM machine is very good, then SBI also have a similar kind of machines. Otherwise, you may not actually stick into the kind of in the process, right? Well, for example, you go to a particular ATM machines that the process is very fast. Every time then you go, then every time cash is available or something like. But some banks ATMs are there, but the process, the machine speed is very less, and again sometimes you find a case is not available or something like that. That's actually because of monitoring problems. Okay, so that's what I told you very beginning. So it's not that infrastructure just to showcase. Infrastructure should be showcase, and then that should be used in a kind of effective way. That's how this in a kind of sustainable way. If that is not available in the long run and in a sustainable way, then the effectiveness will be actually at the lower end. So to make this system efficient and effective, it should be standardized and balanced or something like that. Firms can raise funds directly in the international capital markets. So that today's context is very easy actually. Earlier days, it's very difficult if you like to send money to one country to another country or something like that. So I remember actually, when you try to send money to someone, so you go to the bank and then request bank, then they will ask you SWIFT code or something like that. Again, in one particular date may not happen because they will connect the particular market again. So it's very difficult. Again, internet was 20 years being internet was not so fast and so attractive. So now because of high class in ICT infrastructure or internet kind of facilities, so now these are very smooth and there is no problem at all. Even if within a kind of minute you can send money to international any country in the world, right? So it's very easy actually. Today's context is very possible, very much possible. And again, thanks to FinTech again, because our technology is so fast, so powerful, so improved, so based, so that and so effective. So it happens very effectively now. So that's why it's actually you can say that it's a newly engineered financial products are domestically innovated, you can say, and originated, then sold, brought in the international capital markets, right? So rapid adoptions, okay, so, and again, financial institutions, different economies, cross-border capital inflows, foreign participations in the domestic financial market. It's not that actually you are going to financial market and you are doing the transaction with the financial. So it's a kind of win-win situation. They also doing same things like that. So that means the entire business process is very effective. So because of FinTech, financial inclusions, and financial integrations, so the overall impact in the business sector, overall impact in the corporate sector, overall impact in the economy is very, very positive. Okay, very, very positive. So of course there are lots of ups and downs, and there are lots of negatives, but still this process is actually improved like anything. So that's again beauty in this particular process. So when you talk about financial integration, it's like free flow of capital and free flow of services. Okay, so developed capital market, then that means technique. That's why I start with the concept what we call as financial development. So we like to develop our market first. So if you don't develop markets, then you cannot bring development in the economies. So because market can bring development. If market is well developed, then everything can possible. So if market is very weak, then obviously development cannot possible. So your money will go to the developed market, but you cannot do the kind of business. So that's why you have to maintain. So when you go for integrations or linkage, so obviously you maintain similar kind of facility, like let's say airport, right? Airport is a classic example of some kind of what you can call as free flow of peoples. You can say free flow of people. So when you like to have a air service one country to another country, so one airport to another airport linkage, that means similar kind of facility you have to create. Otherwise, the linkage will be getting affected. So if you don't have a similar kind of infrastructure and similar kind of process, then obviously the market integration cannot happen. I will integrate provided my service and your service should have a similar kind of little bit different. That's fine, but otherwise it is actually more or less it should be same. So those who have visited different airports in different countries, they might have seen it's the same structure. Similarly, if you go to the any bank or any stock market in any country, so the process is more or less same thing actually. You have to go again same, you go to account, today's contest, ATM is again bringing the balance actually. So if say ATM, so whether it is actually Kharagpur or it is in Ahmedabad or it is in Washington, same process. You could just go to the ATM booth, insert your card, insert PIN, and you can get access. I think there is some problem. Hello? Is it audible?
Hello?
Yeah, is it audible?
Hello?
Yes, I can hear. Is it audible? Hello? Hello?
Hello?
Yes, I can hear. Any problem? Is it audible? Hello? Hello?
Hello, Adi sir, you are audible. Adi sir, आवाज आ रही है sir?
Yeah, yeah, I can hear. All of you can hear me, right?
You carry on, sir.
Okay. There was a noise, that's why I was actually wondering. Okay, so now the same structure here. So if you say financial integrations that I have already mentioned, so it's basically capital market assets and free flows of capital, free flows of goods or something like that. And financial market or FinTech has a fantastic role on this particular process. So now the success of FinTech depends upon this FinTech inverse. Say these are all called as FinTech inverse means part of say financial infrastructure in the form of people, service, product, or whatever you can say. So it starts with payments, regulation technology, insurance technology, digital banking, online transactions, blockchains, right? P2B lending, crowdfunding, investments, and again venture capital, something like that. So it's a broad. The scope and coverage is actually very broad. Okay. So let me give you a little bit history about FinTech. Okay, so let me give you some history behind FinTech. Okay, so I have just already explained how these are all linked each other in the process. And then FinTech, financial inclusion, and financial integration. These three are very interconnected and interlinked, and FinTech has a fantastic role to bring actually financial inclusion and financial integration. So now if you look into these three terms, FinTech is the input, and your financial inclusion and financial integration is the output. So if in a particular economy, if the coverage of financial inclusions and financial integrations depends upon FinTech or financial infrastructure. If there is no FinTech and no financial infrastructure, then financial inclusion is at the low levels and financial integration is at the low levels. If financial inclusion is at the low level and financial integration is at the low levels, then by default financial development cannot happen. If financial development cannot happen, then it's very difficult to bring sustainable development in the kind of corporate process or business process. So if any business development, financial market development is the most, particularly for corporate world. So financial market should, the need is actually the improved financial market, a well-developed financial market, balanced financial market, or excellent availability of infrastructure. If that is not there, then obviously this particular structure can at the lower end. Okay, so coming to the history, actually the term originally actually eye-catching in the early 90s. With the help of financial technology consortium, a project initiated by Citigroup to facilitate technological cooperations. Okay, but in the recent era, particularly since 2014, this sector attracted like anything. It's like it's a just like globalization, right? Like once in India, when globalization happened in the early 90s, so there are lots of business grow like anything. So here also same thing, because of this FinTech, and means FinTech means basically it's a set of better financial services and better financial product, you can say. So in the short, actually it's something called set of improved financial services and improved financial product, and that too it is possible only through technological improvement. Without technology, just like let's say automations, right? Because of automations, lots of things very the production process is very fast nowadays. Okay, it's because machinery process, and it is so here also same thing. Because of technology, the financial service is actually improved like anything. So just think about 20 years back, if you would like to do any transactions, then you are supposed to go to the bank in the banking hours only, right? Let's say 10 o'clock to 2 o'clock only. Okay, but nowadays there is no bar at all. 24 hours, 7 into 24 hours, any point of time you do the transactions. Just upon, if you have an internet service, mobile service, then you can do the transactions. And that is the excellent example of FinTech in today's context. So that means we have an excellent and fantastic facilities and service in the financial market to do all kinds of business as per our requirements. So that's why it is very, very beneficial for the country as a whole, in terms of regulators, in terms of consumers, in terms of investors, or all stakeholders in the kind of process. So that the focus is how people are connected each other, right? So the implication for policymaker is that means it's a kind of a revolutionary approach to create a framework of understanding necessary to understand the implication for established financial institutions, IT companies, and startups, regulators like anything. So today's context, it's happened actually. Classic example is say Silicon Valley. So the growth of Silicon Valley, or growth of all say IT hub, etc. It's because of FinTech only. Okay, of course it is not only FinTech, but there are many other kind of attributes involved in the process. But one of the key attribute into this particular process is actually FinTech, because everything starts with improved financial markets. If your financial market is not improved, then everything goes wrong. Okay, so that's why you have to, and by any cost, you have to improve that one, and that too you have to speed up. Okay, to speed up. So if you don't speed up, then you will be lagging behind. So that's why you have to be very careful. as I told earlier, that it is not something actually new. It is actually old wine in a new bottles. So over the process, it is actually refining. For examples, from the 18th century, the fintech come into the limelight, right? So so far as a fintech environment is concerned, so we divide it into the kind of flow into in three different time frames, right? So one time period is actually 1866 to 1967. The other one is 1967 to 2008, and then 2008 onwards, right? So there are three different ways we can classify historically. So then that's called as fintech 1.0, like industry 1.0, industry 2.0, industry 3.0. Similarly here, FinTech 1.0, FinTech 2.0, FinTech 3.0, and FinTech 3.5. At present, we are at FinTech 3.5. So now, what are these actually, or how do you classify all these? Of course, when you say FinTech 1.0, just like in mobile, 5G, 6, so G actually. So G is something kind of advanced version. Any extra G means it is something kind of improved telecom services, right? Improved telecom services. So it's a communication technology. Okay, it's basically communication technology. Here actually it's a financial technology, right? FinTech 1.0, FinTech 2.0, FinTech 3.0, FinTech 3.5. So now, geographically, this FinTech 1.0 started with global and developed. Of course, mostly earlier days technology means it's either in the urban area or in the kind of developed area or developed economy. Then once it is successful and bringing success, then it will be applied into the other developed countries or underdeveloped countries or underdeveloped areas, something like that. So exactly that is how this FinTech 1.0 is all about. So geographically, it's for developed area and globally, right? And again, key elements is mostly infrastructure and computerizations. Okay, so that means actually, I remember, when I was a student. So if you go to the bank, that time, this computer facility was not there. So you have to go to the bank branch, and they have some just like big notebooks, and every record will be there. So big notebooks where you have an account, and all your accounts will be recorded there. So your deposit, advances, whatever in and out, every flow will be there, date wise or something like that. All kinds of So that means actually it is somebody manually write all these things. It's basically black and white kind of an approach. You have to pen and paper, something that but today's when you say FinTech 1.0, no, the immediate transformations or improvement is that the particular financial service improvement. So earlier it was pen and paper. Then with FinTech 1.0, it started with computerization. So that means the same thing you can say enter into the computer and save it. So no paperwork, something like that. So no paperwork and file work now. That too in the computer only. So a computer you have to record all details. So for that you have to create infrastructure. So digital infrastructure you create, and then you computerize everything. So today's context we are saying that digitalize, right? So basically that is nothing but infrastructure, create infrastructure, basically ICT infrastructure. Everything is online, okay, internet based only, or computerized only. So then it will be very easy to record, easy to process, easy to handle, easy to operate, and easy to gather the data in a different. So when you have a data, you can you can process very differently. If you have a pen and paper, then it may not be so easy to operate, easy to handle. But if you have a through computer, then you can easy to have. So for example, you can go for lots of clustering. Male, let's say you want to know in a particular branch how many male members are there, male accounts are there, how many female accounts are there, how many accounts having 16 years plus, how many accounts have a 40 years plus, how many accounts have 50 years plus. So something very easy actually. So just you go by some kind of software, then you can classify, because in the master file you have all kinds of records, all informations. So when you have all kinds of information in one file, for example, let's say Excel file, right? Every informations are there. So very easily you can classify, and with respect to a particular attribute, you can have a complete data, right? So like I have already mentioned. So how many accounts having let's say 10 lakhs plus or something like, how many accounts having 50 lakhs plus. So very easily you can have it. So different kind of clustering, etc. And that itself has a different kind of implications. For example, suppose you are a marketing guy. So you can get to know, you can develop different financial product or other products depending upon this kind of clustering. How much people are attracted in the banking. So depending upon their involvement and their coverage, you can improve your product, depending upon this particular information. So linkages, shift origins. But in the second phase, that's the FinTech 2.0. Again, it is meant for basically globally and again for developed world. So basically, it's again traditional and internet. Okay, so first is the computer and then the internet. So that's called ICT infrastructure. So the first computerization is something called hard ICT infrastructure, and internet is nothing but called soft ICT infrastructure. So earlier actually you can keep every record in computer only, and that cannot be moved here and there very easily, right? But now, yes, you can move, but that we are supposed to move through, let's say earlier days, floppy, then CD, DVD, then let's say now pen drive, hard disk, external hard disk, through which you can actually transfer your data one computer to another computer, one location to another location, something like that. But in the second phase, it's basically the journey of internet. So that means you need not require now what you can call as this floppy, CD. Of course, floppy is nowadays no more. CD is nowadays no more. We are talking about say pen drive and external hard disk. Or there is no need actually. After a particular point of time, you need not require again external hard disk. Everything will be so the speed and the capacity will be so powerful. So you can easily send so many files, and with so many volume, it's not a problem. Nowadays, still there is a problem. You cannot, send a mail with the attachment of, some, there is minimum capacity, some MB, right? After that, it will not go. Sometimes we can take the help of, zip file or something like. But still, even if you make it zip, so it has some limit actually. So that means still the FinTech 2.0 is not enough to capable to solve this kind of problem, but it's slowly in a position to computerize, and then again this service actually from moving one location to another location. Okay, so that means technically it's a one way called as digitalizations, right? Digitalize, right? Both the cases it's a part of ICT infrastructure. So I told you earlier. So FinTech cannot be meaningful, or FinTech cannot be effective without the help of ICT infrastructure. The FinTech improvement and FinTech application and the efficiency absolutely depends heavily on ICT infrastructure. Because if advanced ICT infrastructure, then FinTech process is actually very effective. Otherwise, it is not so good to have the kind of process. Then the third phase is actually coming actually 2008 onwards. That may be in part of GFC, global financial crisis. Okay, so here something called as again starts with developed market, and then again it is again internet to mobile. Okay, mobile startups, new entrants, right? That's the kind of structure again. So I told you that 2008 financial crisis, that's the smartphone, and so that's the kind of improvement. So internet with something kind of speed movement, or you can say in fact this iPad, etc., all these things are come forward to make the business or make the transaction more effective, more efficient, and more timely. Okay, so that's again very interesting. And FinTech 3.5 is actually That's very interesting. That's innovative approach, and the same things, FinTech 3.0, just replicated in, emerging countries and, developing countries. And it's going like anything. A classic example is, China, India, Thailand, Malaysia, okay, Hong Kong, all these, these are all actually going like, anything. Today's context, almost all these, countries are, in the same phase. 3.5. That's the kind of, structure which we are, following, and it's basically, improved advantage in the kind of, financial services only. Okay. So in more, if you like to go a little bit, more in depth, this, 19th century kind of, process, finance and technology. That's the marriage between actually finance and technology. That means basically we develop technology for the financial market or, financial market service. Okay, and that is part of something called as, financial globalizations. Okay, so when we say financial integration, so that's the part of actually process called as, financial globalizations. It's not actually a financial integration, not only meaningful within a country, within a country. So when you say globalize, so that means, linking different financial markets across the world. Okay, basically. So the first age of, financial globalization, that means first, it's a kind of, cable transactions. It's 1866 to 1933. Then in the second phase, during 1945 to 1966, early post World War. So it's a kind of, telex and, dinners clubs. So something like, developed actually. But FinTech 2.0, particularly 1967 to 2008. So there are lots of, improvements. So there's lots of, innovations. ATM. Okay, so ATM actually in the Indian market or emerging market came very late, right? But it is already developed early 1967, but not in a very significant way. But still, it is in a kind of Chiefs, NASDAQ, SWIFT. Okay, so again through SWIFT, actually you can see send money from one domestic market to international market. Okay, Bloomberg, mobile phone, program trading. Okay, so big bank. Okay, so these are all classic examples actually. And 2008-9, so it was because of global financial crisis, because again financial revolution happens, and again there are lots of, improvement takes place after the 90s. That's called, post GFC. So actually when there is a crisis, then obviously people will think differently, and then they bring innovations. When you bring innovations, so then in the financial market, by default, that will be, technically called as, FinTech, right? So again, 2007, iPhone was launched. Okay, Wealthfront is founded and provides automated investment services. Bitcoin. Okay, so like P2P money. Okay, so now again, B2C, B2B, all these actually now it's very easy to do this kind of, it's because of again digital marketing. These are all possible actually, and that too FinTech helps a lot for marketing again. Okay, so that's why so particularly the digital infrastructure actually plays a champion role, you can say, to bring all these development in the financial market. Okay, so in fact 2008 is a game changer. Post-crisis regulatory reforms, financing gap. Okay, so contraction of the interbank markets and increase in regulatory capital. So there are lots of improvement actually. Operational cost reductions. Again, public process. Actually, GFC basically happened, because of mostly because of what you can call as liquidity problem, right? So that's why the problem is actually when you have a fantastic financial technology that to if you transport the economic basically cashless transactions, then by default actually this liquidity problem will not be there, right? Liquidity problem will be not there. So that means technically post GFC is just one of the fantastic solution, which because during GFC it was actually mostly because of liquidity problem. And again, with the help of improved financial service and these financial inclusions and financial integrations, so the particular process is not problematic now. So you need not require actually money now. So you do all kind of financial transactions. So when you have all financial transactions, that's cashless transactions, as a result, actually the liquidity problem will be solved. So you need not require to keep your money in the bank. Okay, means heavy money in the bank. So because of threat issue or something like that, because if you keep cash in the bank, that itself is also loss, because if you put online and suppose it is in a kind of means you have a bank, you have in a particular bank you have actually big money, so you can put in another bank or invest somewhere else. So when there is a requirement, you can transfer or something like that. But if you keep with the cash, then it will not add value, and it will not add any value. That is the reason actually most of the banks, they keep very less cash. Okay, so that's why because of that, there is a liquidity problem, and when you keep less cash, and then again people will come, and then you cannot fulfill their demand, and that's how the liquidity problem starts. But if you make the system cashless transactions, then this liquidity problem by default will be solved. So that is actually very big boost to this kind of process. And because of now FinTech and improved financial services, so you need not require actually to go for cash or something like that. Sitting in your home, and you pay something, you purchase anything. Okay, so again, with the help of credit card, again you can actually also do the transactions and pay later or something like that. That is a kind of a strong regulatory kind of process and contract process through which actually it will be done. So public perception, technology. So there are lots of improvement actually. So that means in post GFC brings lots of changes in the financial market, because that particular crisis is mostly for financial market only. And so that means it is a something financial improvement, and that to development of technology for financial market development, right? So again, if you compare FinTech 2.0 and FinTech 3.0, 3.5, so basically there are lots of company-wise data and startups, you can say. FinTech 2.0 starts with banking restructuring little bit. So initially starts with this JP Morgan, CCB, Wells Fargo, Bank of America, and again company-wise, these are all actually by market capitalizations. Okay, market capitalization, and this is by revenue. And Tata, then Cognizant. Okay, so these are all again different companies. They are benefited by this financial applications. And again, startups by evaluation again 2015 onwards. So Lupex, Square, Market, Stripe, Lending Clubs. So again, these are all actually some of the classic examples. So you can see here. So when you talk about FinTech, it's basically financing, payments, infrastructure. Again, it will be helpful for any kind of operational process, risk management. Because if you go with cash, or if you hold with many cash, whether you individually or any organizational level, it is actually always a risk, and again it will not add any value. Okay, so so that's why you can always, for example, today's context, people are not keeping any cash in their pocket. Okay, so you can go with cashless. Just you have a mobile phone, and that's enough actually. Okay, so you do any transaction and pay through phone pay, Google Pay, Paytm, or something like that. Again, you use credit card, debit card, something like that. And people have a not one credit card, many credit cards, many debit cards. Many banks, many internet facility. If you have many banks, then obviously lots of transaction you can do. Same internet facility, same account, you can change the bank. Just to go to particular bank, then do the transactions. So that means you can have a n number of transactions by this kind of process. And this is all happened because of excellent infrastructure, financial infrastructure, and that too excellent financial technology, improved technology in the financial market, basically. Okay. And again, FinTech 2.0 is the same process, which I have already mentioned all these things. Okay, so which I can means mostly actually this most important financial innovation that I have seen in the past 20 years. That's the the kind of comment you can see in the process, and that's 2008 crisis means post GFC, basically post GFC. This we have already discussed. Okay, so let me. Okay, so basically, actually, there are lots of advantage actually, and when you go for some kind of swift, or basically you can say that SWOT analysis, right? So you will find there are lots of improvement and benefits for the economics, particularly finance and investment, operations and risk management. It's a pre-crisis, post-crisis, and payments and infrastructure, traditional, new. So what was the traditional, kind of all the existing infrastructure, and what is the kind of new infrastructure or something like. In fact, if you go to the particular bank now, you now find very interesting actually. So there is the number of cash counter is actually now less. Okay, so only one or two cash counter you'll find for operational requirement, or else actually if they encourage heavily that why don't you go to ATM and do the deposit, withdraw something, or you can go to your phone banking, or say mobile banking, and again internet banking, and you do all these kind of transactions. No need actually, you need not require to withdraw any cash. Okay, even you go to the market and have have all your products requirements, and then ask how much I have to pay. Just through phone, just you go with the mobile, and through mobile you can pay and have the goods. Okay, so this is very much possible now. This is very much possible now, and again that's thanks to FinTech approach, and the kind of possible and again with the kind of safety, security, all these things, because if see, that's why I'm saying that even if you go to ATM, so again the passwords they will ask, again the SMS will go to your bank, mobile phones, and your email. So that means again if there is any kind of fraud and any kind of mismanagement, so that will be a catch, and that could be easily solved. So that means the safety and security aspect is also of course any kind of financial transactions, safety and security is very important. And again with the financial technology, improved financial technology, so people are now very happy to do all kind of transaction. Okay, of course there are many negatives also, but still, it's very secure nowadays. But it's very easy to catch up people now. If there is any kind of mistransaction or something, very easily you can actually track now. Okay, and immediately you cannot actually withdraw money. So even today's context, you cannot withdraw big money by cash from a particular bank. Okay, so they suggest you that why don't you go for money transaction, money transfer, or something kind of credit card payments or debit card payments or something like that. So some way they will tell you. So why you need actually big cash, and what is the because it's a very risky actually. So now with the help of financial technology, these aspects are improved like anything, right? So it's not improving. Yeah. So basically, again, in the FinTech 3.5, basically 2008 onwards, just after GFC, so there are many improvements actually, like M-Pesa, Alibaba, Lupex, okay, MyBank, WeBank, okay, then this PhonePe, Paytm, Google Pay, Amazon, okay, any kind of so you will find plenty of, particularly in India and in this particular corridor actually, China and the India, you will find plenty of such kind of options are there. That means industry 3.5, FinTech 3.5, It's very popular for these emerging countries and developing countries because of improved financial services, and that will not only improve financial services because of, again because of lots of variety actually. So now if you like to go for any kind of financial transactions, so you have lots of options. You can do this financial transaction through PhonePe, through Google Pay, through Amazon, through Paytm. Plenty of options are there. So that itself is actually improved financial services in the financial market, and that too again with the help of technology. Of course, it is all these are with the help of digital infrastructure only or ICT infrastructure. But the question is it attracts the party who can provide this service. So that means any party use digital infrastructure and creates different kind of infrastructure for the people, and that to for financial improvement. That is the financial service improvement. So that means it's a very that's very interesting, and that too that competition is very big now. So and when there is a competition, obviously the costing will be less, and again people have lots of options. That itself is actually very sustainable. Okay, so if some account sometimes some facility is not operating, or some problems, so then you can take the help of other ones. That's very easy actually. Again, suppose you are sitting in your office and doing some kind of transaction in a particular bank, and that there is showing some error. So no point. So just log out and again go to another bank account and then again do the transactions. So there is there is high chance that at a stretch all banks may not be not operational. Okay, so that's very true. For example, I have seen actually when we go to market, sometimes I go to a particular ATM and that ATM is not actually working, and sometimes there is no cash, right? And sometimes it is not functioning well. Then just you go another ATM simultaneously at the side door, right? Then you will get easily. So that means there is no problem at all now. So even if you have a one bank account, but that is accessible in each and every bank, and that is very effective, and that too so far as the consumer is concerned, customer is concerned, they are very beneficial. It's a fantastic kind of or excellent kind of improvement in the financial system. So that itself is actually having. So these are all actually slight examples. So how they are so particularly actually Asian belt, China, India. So so they are very because of population and size of business and growing economy. So it's going like anything actually. Mobile phones, banking penetrations, that internet banking, something it's very effective actually. Okay, so that's why I told you earlier that the effectiveness of this particular service depends on infrastructure mismatch. But you create balanced infrastructure, in each and every city and each and every bank. Okay, and that itself will attract actually people, and that itself brings financial inclusions, and that itself also brings financial integration. So when you don't have infrastructure, well developed infrastructure, and again when you don't have a balanced financial infrastructure, then there will be lots of loopholes in the process, and that itself will affect the financial development. So in order to have a financial development, and that too in a sustainable way, so infrastructural setup is must. So unless you have a sufficient infrastructure, financial infrastructure, then this facility cannot be improved very effectively. So likewise, actually, we have lots of operational process. Similarly, financial regulations. So when we come to financial regulations, then means it is something called as again safety and security point of view. So broadly speaking, financial regulators have four main kind of attributes. It basically starts with the financial stability, prudential regulation, competition and development, and conduct and fairness. So in all aspects, you have actually means it is again standardized. Actually, it's more or less again standardized in the financial market. So that means another beauty in the fintech is that it creates a balanced competitive environment in the life in terms of financial infrastructure. So just like you go to the same example I'm bringing, the airport If you like to go for any international travel, you must have one particular document, say passport. So same thing here actually. So here actually in the financial market, you go to any ATM booth, any bank, so you must have one ID ATM card. So that ATM card itself will be accessible each and every ATM. So you may have a SBI ATM card, or you may have a PNB ATM card, or you may have a say Canada Bank ATM cards, but whatever may be, but it will be operational in each and every ATM booth. So that's why it's not a problem. So it's so that itself is actually something called as financial stability. Okay, financial stability, and then the competition is also very effective. We are competitor, but we are providing same service to customers. That means they compete each other, but in the meantime, consumer or customer getting a very balanced kind of balance and something kind of riskless riskless benefits in the banking system, and that is very safe and secure. It's not that you are SBI card means you will only withdraw money in the SBI ATM booth and that is secure, and if you draw money in other ATMs, that is not secure. It's not like that. It is very much secure. You go to any bank in that particular process. So that's itself is very interesting. And the regulatory implications, then increasingly it's a who can provide financial service or provided. So how to balance startups, low cost models, agility benefits with the compliance cost. So these are all, that's why these FunPay, then this kind of Google Pay, Amazon's, all these things are coming very effectively. Paytm, so they have a big business now, and people are even if particularly go to rural area, people are very much acquainted with this. That means with this financial improved financial service, and that to improved competition in this particular financial service market. So people, the financial inclusion is increasing like anything. Why people are enjoying, because it's very safe and secure. All right. Of course, you must have little bit you must little bit literate about the use of digital infrastructure. Otherwise, it may be very risky. But of course, if you don't know the game, then you should not play the game. So you are supposed to learn the game, and then you are supposed to play the game. So that is mandatory, and you are supposed to have that value. So it's always suggestive that you first learn and then apply. But the thing is that the most important thing is that it must have availability. If there is no availability, then what to plan, how to enjoy the particular benefits. So there are many different problems. Okay, new business models. So P2P platforms, money market fund, liquidity problems, solution to the liquidity problems, scalability. So there are many many interesting kind of options and opportunities are there. Okay, so there are many again electronic payments are and that too there is lots of regulatory kind of so there is everything. So even if today's contest any remunerations etc. also it's through online only. So it's everything actually. It's a kind of and that too the application is so well connected. So that means every organizations, every institutions, every people, is actually very well connected. Not only in India, across the world. You may stay here, but still you may have access each and every country, each and every bank, each and every financial markets. So that's not. So of course, country to country there is a slight difference, but of course there are certain areas where there is a common approach altogether. So there is no disparity, and that means it's a kind of balanced development. Okay. So likewise, this is actually again technology and regulations, and so these are all something actually improved kind of scale. And with this, actually, I'd like to stop here. And if you have any kind of questions, etc., free to ask me. Otherwise, we'll stop here. Thank you, everybody.
Thank you very much, sir. Participants, if you have any query related to his session, you can ask. We can open to discuss on the topic. Any question, anyone?
Yeah,
if you
any
have,
question.
so you can ask. Yes.
I think next lecture is FinTech in insurance market probably. Yes, I have already discussed
Yes, sir. Yes, sir.
in general, but yeah, particularly if you go a particular market, then you may find very interesting again. So that because the financial service again, financial products are different from market to market with it, because financial market is very big basically. I told you that there is proper banking system,
Yes.
or you can go to stock market, you can go by insurance coverage. So it's a lots of variety nowadays. Okay, so in terms of variety, in terms of infrastructure, in terms of facility, in that it's a balance and uniform. So that means technically in current era, and people are enjoying like anything, which was not there. I remember 20 years back, it's very difficult to go for in any kind of financial transaction. It's very difficult. So you do it. I remember when I was a student, then I had need some money, then it was horrible actually, because you can go to bank, but bank was closed. Then again, people people may not help you to give you finance very easily. So you have to wait 24 hours to again withdraw money. So that is the type of situation we had in 20 years back. But nowadays, within 1 minute, actually you can
within 1 minute. Yes.
Yeah, that's the
transferring money is in the tip of finger. Like you can just anywhere you can transfer money to anyone. It is like
that is the beauty of
it's a huge transformation in
huge transformation. You are right. See, like it's changing. Economy has changed like anything, and all the business is growing like anything because of this fintech. Because financial transactions, it's a very big headache actually. Why you like to pay cash and to deposit and withdraw? It's very risky actually every time. Nowadays, no risk at all. Just sit in your office, and then do all these transactions. That's very easy.
Very
so
easy.
Let us,
yes, sir. Yeah, true.
Let us stop here. Thank you very much.
Yeah, let us conclude, sir. I think no question from participant side. So I thankful to Dr. Pradhan for joining. Thank you, sir.
Thank you.
Thank you very much.
Bye bye. See you.
Bye, sir.